Yeah, today's Wednesday, so as usual, today is the trading sort of day. So what we try to do is we go through the sentiment data and try to get some low risks and high reward setups. And then from there, we do explore some other topics as well, such as the Europe CPI, explain it, as I've been, a lot of people have been asking me here in the office, actually, what was the point? Because if the CPI is higher, then if the inflation is higher, then the currency should be stronger. Not necessarily, and I'm going to show you guys why that is the case, as we had a higher than expected CPI for Europe yesterday. So it came in as in line with the previous. So before it was 2.3%, and the consensus was at 2.2%. So I would, I'm going to explain you guys a bit further on that topic and why that can happen with other currencies as well. Okay, and then afterwards we're going to jump into the FinLogic sentiment data. And we're going to be looking at Aussie CAD. We're going to be looking at Aussie dollar, also the dollar yen, as well as the dollar. Also the pound dollar. Okay, so we do have quite a few things to go through today. I'm gonna try to be explaining, as we go through, but do expect that the Europe CPI will be the first topic. And then if you do have any trades on the pipeline, like Aussie CAD, Aussie dollar, dollar yen, or pound dollar, then you can, perfect. So let's first talk about the Europe CPI. Let me bring up the economic calendar here pretty quick for everyone. So we can clearly see the Europe inflation rate came up a little bit higher than what was expected and higher than the previous as well. So previously it was 2%. The forecast was to be no changes, and the actual came in at 2.1%. And the core inflation has also come in higher than forecasted, but equal as previously. So previously it was 2.3%. Forecasted was 2.2%, and the actual came in at 2.3%. So we have a few things here, okay? So the inflation rate was 2.1, the core inflation was 2.3, and it was similar than the previous. It was the same as previously, actually. So why did the euro actually dump and not strength? So let me just take this out. Just a second. Perfect. So let me go for a 1 hour time frame. And then the release was at 7 p.m. Sydney time. So was right on this vertical line here. Somewhere around here. Perfect. So it was literally on this line, but we saw the euro dumping a lot. And then we saw euro, trying to come back and then going back again down. Well, there's simply a reason for that. So if we just come here and type ECB inflation forecast, we can come here into macroeconomic projections by European Central Bank. And we just do understand and accept. Inflation outlook right here. We can see that they say that the headline inflation is expected to remain consistent with the medium-term target, although it may temporarily fall below it, below the 2%. Okay, and that would be driving by energy developments. Inflation is projected to average at 2% in 2025 and then 1.6% in 2026 before turning to 2% in 2027. So they say average. So the average would be basically getting all the year. So that's, we just type CPI Europe, and we go into trading economics, and we can have the inflation rate, and we can see that since beginning of this year, let me just do a very quick maths here. I think you guys can probably see my calculator, but the January was 2.5, February 2.3, plus 2.2 plus 2.2 plus 1.9 plus 2 plus 2 plus 2.1 equals, divided by 1, 2, 3, 4, 5, 6, 7, 8. It's averaging 2.15%. So it's 0.15% off in a sense. Yes, it's great. They haven't missed much, because when we see here 2% is 2% from 2.15% is only 0.15%. So it's not the big deal. It's around 10% of a miss, below that, around 7 to 6% of a miss. But still quite a miss. Now, the other point is the investors were looking at the ECB projections, and you can see the full report here. We don't need to go and read the full report, but you can just come here. I'm going to send the link for everyone. Right, the link is on the chat. So you guys can see here that we have, it's a huge report. If you want, you can read all of that, but it's really great, to be honest, to read all of this. Or you can also use ChatGPT to sort of summarize and work with you to get better results quicker, in a sense. Now, that being said, the ECB was expecting inflation to be cooling off. Okay. So remember what I said yesterday: the good is good and the bad is bad. That's exactly what I'm looking to trade at the moment. The good is good and the bad is bad. So whenever we get a good release, we're probably going to be looking for a inflation below expectation. Whenever we get a bad release, we're going to be looking for inflation above expectation. So it's literally bad for the society, will be bad for the currency. Good for society will be good for the currency. And why is that? I know it's a little bit tricky, but I just want to test you guys without, no problems to get it wrong, because I know it's a bit of a tricky one and it's a bit of a more in-depth economic scenarios. But why do you guys think that when we had in 2023, 2024, high inflation was good for the currency, and now we have high inflation being bad for the currency? What is the switch? What did switch? I'm going to give a minute for you guys to think about and send on the chat, and try to sort of think about that. See if we get any answers. No answers so far. Nakash say, is it about growth? What sort of growth do you mean? So if you can just, okay, GDP. Casey say employment rate. Okay, well, not there yet. Let's see if anyone has other answers, and then I can give the actual answer. Is it because Germany is holding the euro up? No. Okay. I know it was a bit of a tricky one. I'm gonna try to explain that in a simple way so it doesn't confuse even more, but it's a confusing topic as it is, as its core. But I'm gonna try to, and then if you guys have any if you guys have any questions, just send it over in the chat. So in 2023 and 2022 and 2024, we had a very simple scenario. Whatever central bank was looking to keep the interest rates higher would get the money from investors. And the reason for that is simple, because when we look at the yields, so let's come here and look at the US 10 years, for instance. Okay, let me put this on a daily chart and zoom out a little bit. So between 2022 and 2024, so between these two vertical lines here, we can clearly see that the rates were going up. Pretty much every month, the rate was higher than previously, okay? And then until 2025, and on end of 2024, beginning of 2025, we see the rates are consolidating as it is there. But the central bank was having a higher inflation, so meaning that after COVID, we still had a high inflation. So I don't know if I can do that, but let me check. That's perfect. That's perfect. Okay. So right here, we can see, let me actually change that into a line as well. So on yellow, we can see the US government bonds for the 10-year bond. And on pink, we can see the US inflation rate year over year. So right now we have an inflation rate at 4.1%, as we had a rate now at 4.28%. What can you guys, just looking at these, what can you literally note? It's a very simple chart. What can you see just looking at these, without thinking too much, just looking at these? What are the coincidences here that you can see? Okay, I'm going to tell it. Spread, not quite there. It's even simpler than that. Just looking at these, we can see that whenever not the green, sorry, the pink line goes up, the yellow line goes following that as well. But when the pink line goes down, the yellow line doesn't go down. Okay, so the yellow line basically stays the same majority of the cases. So the reason for that is when the central bank knew that inflation was rising, not quicker, but it was, month after month, we were having a higher than previous month. What they had to do with the rates is they had to adjust the rates as it was going with the inflation. Okay. And the reason for that is very simple. We can't let the inflation be higher than the rates. Otherwise, the money will be worth nothing. So we need to some point of equilibrium that the rates will be maintained at some point that the inflation will be going down. With the rates higher, what can we see? Well, let's go here and add the DXY. So the DXY is on the purple side now. And we can see that whenever the rate was higher, whenever the bonds was raising on the yellow line, we could see that the purple line was raising with it as well. And when the consolidated, in a sense, this consolidated as well. And now there is the Fed basically saying that they're going to cut interest rates this year, then the US dollar decreases in value as well. So what we have here is basically Forex. It's an interplay between economy, currency, and forward guidance. Okay? It's basically it. It's simple as it is. So the forward guidance of the Fed was we are hawkish, okay? We look at the inflation and we see that the inflation can be higher based on our projections. And for this reason, we will be keeping the rates higher for longer. So if the rates will be higher for longer, what would the investor want to do? Well, the investor would want to place the money there because they knew that the inflation was going to be higher. Okay? So higher inflation on that period was great. It was making money for people. Now it's not. Okay? And basically what I want to go and show you guys is exactly the opposite. When you go to Europe, the 10 years, okay? Okay, that's a problem. There you go. I have to do like that. I put here the inflation from Europe. Let me see if they have an indexed version of inflation. There you go. I'm not too sure. I don't think it's this one. No, it's not this one. Definitely not. I don't think they have it. That would be very simple to show you guys. European Inflation Linked Corporation. Yeah, no. But anyways, we can see that right here. So let's go for euro dollar. Okay, good. And go for the 4 hour. Perfect. So the inflation came in higher than expected, but the ECB was actually expecting the inflation to be lower. So if the inflation was lower, they would continue to cut the interest rates. So now what gives the sensation for the population is that they don't know what the hell they're doing. Because the inflation came higher and they're expecting inflation to be at 1.8%. So why should I keep my money there? Well, let's take the money out and buy some other currencies. Let's go to gold for instance. So when we look at gold price, it's on an all-time high. Well, voila, that's trading. So did I make that clear? Can you guys understand that? Do you have any questions? Is it unclear? Did you guys got it? It's because simply for the simple reason that the inflation was missed by the central bank. So if that was previously, the central bank would be hiking interest rates, but now they would have to pause interest rates and won't be able to follow the agenda that they've promised to the population. So it's a miss of conduct in a sense for the population. Is that clear? Hopefully it is. Maybe not. Yes. Okay. Yes. Okay. That's great. Do you guys have any questions on that? So then we can jump to the normal topic of the Wednesday usual. I don't think so. Okay. Well, great. You guys understood. But yeah, that's basically the reason why the euro actually witnessed with the high inflation and didn't have it and it had a strength. Okay. Now coming back to FinLogix, the Europe CPI was explained as planned. Now that's cool. Was explained as planned. Now let's go and see some of the sentiment data for the trades. Okay. If we go here into the FinLogix, then go into tools, and then go into market sentiment. someone is asking for GBP CAD. I think I've looked on that yesterday, didn't I? I say that the target was exactly 1.84. So I literally call it a short. Yeah, it was like yesterday at 4 p.m. was here. I've called it a short before 1 hour of this huge drop. Um, yes, I'm still expecting it to reach 184. Okay. Cool. Moving on. So let me just refresh that. Do you have a trade short on GBP CAD or are you long GBP CAD? Why is it not going? Long now. Are you long now? Yeah, okay. Well, that's your strategy. You have to follow your plan. Okay. I'm not too sure why these last two is not loading, but that's okay. We can work on with the rest of them. So the first one is the Aussie CAD. Okay. So we are literally the tipping top of the point of that short. And I've mentioned about this short on last week right here. So I just want to revisit. Just want to revisit this trade. Let's go for the 4 hour. Oh god, there we go. Just want to go for the 4 hour chart. It's a bit better to see. So I remember I told everyone that the market was trading around this price, and I say, look, I would like to expect the price to go a bit further, and then I can have a look at the shorts. Um, sorry, yeah, that was last Wednesday, correct. So I've mentioned about this trade last Wednesday. So the trade is still valid. Okay, I haven't changed my idea. So Aussie CAD short is still a pretty decent trade. I'm looking to the price to go down below here at around 89. So 89 cents, 0.89. That will be the most suitable scenario in a sense. Other than that, I wouldn't like to trade that long. Okay. Mainly because I see that the ones gaining in strength now in the market is the Canadian dollar, the Canadian dollar, the US dollar, and the gold. Okay, so it's basically always the same. So I would expect that to continue to come down at 89 cents. Okay. Um, then we move to Aussie dollar. So Aussie dollar is a bit of a tricky guy. There we go. So Aussie dollar, we have it a long position. So, but when we look at this, when we look at the Aussie dollar trade, I think we've mentioned about this trade just got in and triggered. The entry just got triggered, and the reason the entry got triggered is because last Wednesday. Let me just check. Yeah, last Wednesday I had the trade idea of a long position into the Aussie dollar. Right now, I'm not willing to long the Aussie dollar and I'm looking to short the Aussie dollar. So this position is in profit at the moment, but we have NFP right around the corner. And for the look like, I do believe that the market is changing a bit of character, and most likely we may have a bit of a stronger than expected NFP, especially following the what happened on the last month releases that Donald Trump claimed that the job numbers were fake. So I'm not saying anything. I'm not trying to tell you guys that these next jobs may be pushed up because he put it someone that he wanted. So yeah, just I believe that we may have a higher number than expected due to those factors. So as this position is in profit, not many, just around 20 pips, I think. Yeah, literally 20 pips. I would close this position, all right, with a very small profit. So literally just closing the position and changing my potential targets as the market sort of switch it around. And being a trader, you need to focus on that. Okay, if we go to the 15-minute time frame, I'm looking at these on a perfect setup. Okay, literally a perfect setup. We have right here this box. Okay, so right here, let me take this out. We have a huge unfilled price here. So my target now for the Aussie CAD is around 64,200, and I don't see any problems of why not having a position somewhere as the price is, or you can either wait for a bit of a pullback on this box. So it's completely up to you what you want to enter. I would just wait, okay, put my stop losses above these highs, and my take profit down where I've mentioned at 64,200. And then we have a clean setup to basically 25 pips is stop loss to 96 pips take profit. So that's basically 3.7, 3.8 times your stop loss. Okay. And that will, if you put $100, you're probably going to get back, if we don't lose the $100, we're probably going to get back around $270, $280. And then after swaps and fees, we may get like $320 back. If you get $20, if you put $20 or $10, you're gonna get back like $35. So it's a very interesting scenario here, and I high believe on this potential Aussie dollar trading short. Okay. Now, US dollar Japanese yen. So US dollar Japanese yen is a strong buy, and I completely agree with that. Because as I say, we have the Japanese yen losing so much strength. Okay, I've even wrote about that today on my blog. So for now, I agree that we can probably revisit these after we have anything actually happening into the market. These potential three targets here down the bottom. So my only objection is that there is no clear entry point right here for us to get involved in this trade. So if we look closely, we can see that it just broke these highs right here. A very shy break, but still some sort of a break on top of that. And if we get a pullback somewhere around these levels here, would be much better to be entering in the market than just entering where the market is at the moment. Okay, as it can well possibly come down to back into the consolidation now, down to 147. So pretty much it is a good long position, as I don't have yet a position built on that. I'm going to leave that one to you guys, but I'm just saying there is definitely a potential for the US dollar strengthening in the near term. So therefore a long US dollar Japanese yen wouldn't hurt, in my opinion. Okay. And now the last one is the pound against the US dollar. We have a long position. I don't agree much, because yesterday we did had a loss into our positions. Okay, I just want to show you this as well, because some of the people come here and think that we just win. But last month we've had a pretty good close. I think it was around 4% in a sense. But this month we're not starting pretty well. We already started with a loss of 1%. Now we need to do 2% to being profit. So I hardly believe that GBP USD would be a good long position at the moment. So maybe switching hands wouldn't be a problem here, due to the factor, as I've mentioned, of the US dollar possibly getting stronger soon. So let's hope and see what we can get with the GBP US dollar. Okay, so my only trade ideas now is basically short Aussie CAD, continue to hold this position, and a new short on the Aussie dollar. Okay, so this short on the Aussie dollar is one of the favorite ones so far for this moment. I would be holding this position until hitting take profit, but also managing the risk as we're going, of course, on the trailing stop. Okay, and then it's completely up to you how you manage the positions. But I would definitely be looking to close maybe 50% or something around the lines. Okay, well, guys, thank you so much. I hope I could help you all today. Tomorrow we'll be back into 4 to 5 p.m. again. Tomorrow's Thursday. So hope to see you guys around and enjoy another session with everyone. Have a great day, have a great afternoon, have a great morning, and I'll chat to you tomorrow. See you guys. Bye-bye.